Germany's parliamentary elections are expected to bring continuity and stability. However, some analysts are concerned they may well usher in a period of paralysis and uncertainty. Joining me down the line to share his insights is Dr. Simon Juncker. Now, Simon, one of the most contested issues ahead of the election is the energy shift which Merkel is championing. While wholesale electricity prices have fallen, the green energy producers keep receiving their high guaranteed prices, sending overall energy bills ballooning. Has the bill become a victim of its own success?
In my opinion, two things that should be highlighted regarding the energy shift. The first thing is that it will cost money to the German households. That should be clear. And second, it requires an enormous amount of investment in the years ahead. So the German government is doing a good job in trying to attract private investment also from abroad. And I think guaranteeing high prices is one of the instruments of making this investment in the energy shift attractive. So I think it's a necessary that we have these high prices. We don't get around that.
Some analysts have said a grand coalition would be seen as more periphery and Euro-friendly, but would likely slow down the pace of any reform or reaction in a crisis, therefore leaving the euro potentially stronger and yet more brittle if a shock were to occur. Do you agree?
Well, I don't agree that a grand coalition would be more periphery and Euro-friendly. I think that all major parties currently reach a consensus on the issues that are necessary to save the euro area. So I don't expect major changes whatever coalition comes up after the elections.
Beyond crisis efforts to save the euro, as Europe's top economy, Germany remains unable or unwilling to pull its weight on major international crises. That's according to analysts. Do you think, despite being an economic powerhouse, Germany grapples with its global role?
Well, I'm not a political observer. I'm rather an economist, so that's difficult to say for me. But I mean, pulling its weight in international crisis, that's the geopolitical strategy of other countries, and I just think that Germany has a different geopolitical strategy. So, in my view, that's it. It's not doing less well, say.
Do you think, Simon, that it will only be after the elections that sensitive subjects such as Greece, France and Italy will be addressed? How real are the risks emanating from Southern Europe, would you say?
Yeah, I think it's pretty clear that, in the election campaign in Germany, there are major points putting at rest regarding the euro area crisis. So right after the elections, it's reasonable to expect that there will be some push forward in major issues. For example, I think it's without doubt that there will be a haircut on the Greek debt. So that's pretty sure, and in one form or the other. But there will be more movement in other issues as well, like the banking union. That's pretty important. That there will be some good decisions that are made on this particular subject. But there are also other issues that should be addressed and which are currently off the table, as it appears to me. For example, we should talk more about what we should do in the future. Which mechanisms should we agree upon on how to tackle with states in the euro area that are threatened by liquidity issues or even insolvency issues. So we should really address that issue as well. But the banking union and all these stuff associated with it, that's very important, and I think there will be some movement after the elections. You mentioned the risks emanating from Southern Europe, and currently I'm pretty confident that this won't be a major risk facing us in the near future, because the euro area as a whole is stabilizing, and reforms are done in the countries. I mean, there could be more, but at least there is some progress. And in our view, the more threatening evolutions in the past weeks are the capital outflows from emerging countries. So in our baseline scenario, that's not something that should materialize as a serious issue, but that's a potential risk that's really threatening the world economy.
We had CPI data released which remain unchanged as expected. The slowdown was primarily the result of catch-up effects tapering off in the coming months. The government assured the German economy would, however, remain on a path of growth. What is your outlook for German bonds and the German economy in general?
First, I would agree that the German economy will continue to grow. So we see an uptrend in economic growth, but in our view, it's rather moderate. If you look at like industrial production, that should be a very slow uptrend. But having said that, the financing costs for the German government will remain very favorable in the time ahead, although we expect some convergence in rates due to the fact that this safe haven effect somewhat phase out. So Bunds will be like Bund notations will ease somewhat with interest rates slightly picking up.
Simon, thank you. Well, that's all from Simon and myself, but those all-important elections occur next week, and of course the TV team will keep you up to date with the very latest as it happens. Goodbye for now.